Bruce Mandel, how are you doing?
Good, Austin Cassidy. How's things?
They're good. They're good.
Thanks for having me in.
Absolutely, yeah. So obviously, I've been in real estate for a little bit now, and it's my understanding that you and your wife Maureen are going into the investment in real estate space. You've had a long corporate career, and you're making that transition now. So, I guess my first question, after 40 years in the corporate career field with transportation, private banking, investments, why have you decided to start an investment in real estate firm?
Yeah, great question. So you would think after 40 years you'd be tired, but quite frankly, I think I have a lot more to give, right? The corporate world is the corporate world, and you're working for somebody else, and you're making somebody else profits, and you impact people along the way. Here, as we started our own firm, and in fact, we started our firm, but we've really been in the investment world, in the real estate investment world for well over 20 years. We started back in the late 90s in buying duplexes and houses and things like that. It gives us an opportunity to give back, to scratch an itch. I've always loved the real estate world, even though I was in the stocks and bonds world. And it gives us a chance to work with young people like you who are colleagues of my children to bring across some of the knowledge that we've had that we didn't have help with. So I'm hoping that we can, in the real estate world and others, and other worlds, bring across knowledge and methodologies and opportunities that we didn't get when we were younger.
And it's my understanding that the name of your firm is Magic Equity Partners, and that MAGIC is actually an acronym. Do you want to explain a little bit what that acronym means, and then what your guys' main focus is?
Great question, thanks. So as you know, you've known me for years, MAGIC, I love acronyms, and MAGIC's really an acronym for Making All Great Investments Count, right? Spent all those years as a corporate fiduciary. So when you're in the investment world, being a fiduciary imbues a responsibility upon you. So making all great investments count really reflects what Maureen and I are thinking about in the investments we make, and we're thinking about our clients and partners, because they really are partners in the investment world, and we're really focusing in on multifamily, larger projects, though we do have some ideas about how to get started, how young people can get started in this world, and how we can help them to not necessarily invest in 100 units and above, which we're investing in, but in smaller things and grow their portfolio that way.
Okay. And then with real estate and investments, they kind of go hand in hand.
They do.
And we've seen the markets of both shift dramatically over the past several years. It's definitely an interesting market. So can you give me a little insight into what you're seeing in today's market, and then what opportunities there may be?
Yeah, good question. So let me just give you a perspective. So we have been in a historical bear market for bonds. So from 1980, when Paul Volcker took over, until just recently under Jerome Powell, bond prices have been dropping. So we had literally free money for the longest period of time. It was almost impossible not to make money. Now that we're going back to a more normalized interest rate, it requires some acumen in the investment world. So if you're looking at the equity world right now, it's really hard to make decisions about what we should be investing in. Warren Buffett has said, just buy the S&P 500 and you'll make some money, and that's actually not bad advice. I don't particularly like it. I think you should buy individual stocks, but for a lot of people that will work, right? In the real estate market, because interest rates have risen so rapidly, 5.75% in like less than 2 years. You could borrow money on a big project for 3.5%, 4% 18 months ago. Now you're lucky if you can get 6%. You got to be very, very careful about what you're going to make a decision on and what you're going to buy, right? So if you're going out and looking at larger units, you better be doggone sure that you are going to be able to get the rates increases, the rent increases, that you can add value, and that you're going to be able to sustain that cash flow over time to cover all of the things that you could incur. So if you're asking me what you should invest in right now, if I'm going to invest in the equity markets, buy short-term bonds. If you're buying in the real estate market, there'll be opportunities. I'd be looking for things where people need to get out, or you can assume a loan that's somebody's hit their targets and they've got another 7 years to go. But I'd be very, very, very careful in your underwriting right now.
That's some great insight. And what I hear a lot and see a lot in the research and reading I do, and just by talking to people, is a lot of people have cash on the sidelines, and everyone, it's burning a hole in their pocket. They want to deploy, and some investors are being patient, maybe being smart, looking for the right deals. Some are just throwing money at the markets. What can someone that's maybe newer to the investment world or wants to make sure they're making the right decision, what can they do in a market like today, whether it's equity or real estate? How can they approach the market?
First thing I would tell them, get educated. Really, really important. Second thing is, as you well know, I use a lot of acronyms, is get yourself structured correctly. I use POP as my acronym for thinking about how to put my investment strategy together. POP stands for perspective, objective, and people. From a perspective standpoint, you have to think. I think about it in a 3-act play. ACT being ACT, 3-act play being, what am I going to accumulate? What am I looking to accumulate? Am I looking to accumulate real estate? Am I looking to accumulate bonds and stocks? What am I looking to accumulate? Number one. Number two is, when I accumulate those assets, how do I coordinate them? How do they mesh with each other? How do they mitigate risk for me along the way? And finally, T, time. How long am I going to need them for? So if I need them for a short period of time, if I'm going to go buy a house or my kid's going away to college, keep that powder dry. If I'm thinking I won't need it for 30 years, then you can start looking at other options, right? So that's the first act. The second act is really, what's my objective, right? And that's another act. Objective was, is it for appreciation? Is it for cash flow? Or is it for tax purposes? Every real estate and equity investment has a component thereof. What are you really looking for? And when you make that acquisition, understand that you're buying it for that specific piece. And finally, the final P POP is for people, right? Making sure that the people that you're working with are authentic, that you really can get down in there, they're giving you it straight, that they're careful. Talk to others that know them. How have they been handled? And finally, are they trustworthy, right? What they say, the truth, is there a history of that? And are there others that will validate and verify that? So again, back to the POP, right? Perspective, objective, people. And I got to believe if you go searching for the right people, the rest will come out.
Yeah. Well, I really appreciate that insight into just our current markets and what you're doing here in real estate as well. For the people that are listening, how can they get a hold of you, whether they want to ask you questions, look into Magic Equity Partners, or just get a hold of you?
Sure. So I can be reached at Bruce, B-R-U-C-E, at Magic Equity, M-A-G-I-C-E-Q-I-T-Y, one word, .net. Not .com, but .net. Once you get into the website, my calendar's there. You can book an appointment and we can have a conversation. I'm happy to help darn near anybody.
Well, Bruce, we really appreciate your time. Thank you so much, and good luck with Magic Equity Partners.
Thank you.